worried that your SIPs are showing negative returns? Does it feel like your investments are failing? Before you hit the panic button, let's uncover the truth. What if I told you this is not a failure but a perfectly normal phase of investing? Stick around because today we are breaking down everything you need to know about negative SIP returns, why they happen, what they mean, and how you can navigate through them like a pro. Negative returns on your mutual fund sounds alarming, doesn't it? But here's the thing, seeing your SIPs dip below your invested amount is not uncommon, especially during volatile market phases. It doesn't mean your strategy is flawed. In fact, it might be a sign that you are on the right track. Let's dive deeper into this and explore the factors between negative returns, address your top questions, and share actionable strategies to keep you on the path to financial success. So, why do negative returns happen? The answer lies in three major factors: market fluctuations, asset performance, and short term volatility. First, let's talk about market fluctuations. Ever noticed how the market seems to be on a roller coaster ride? Global events, economic trends, or even a tweet from a billionaire can send the market soaring or crashing. Isn't it fascinating how interconnected everything is? But here's the kicker. This volatility is exactly why long-term investors thrive, because what goes down often comes back up stronger. Now let's talk about asset performance. So what if your SIP invest in stocks or bonds that underperform? It happens. Not all assets deliver stellar results at all times. But isn't it comforting to know that your SIPs are spread across multiple assets, reducing your overall risk? Now let's come to short-term volatility. So let me ask you this. Would you judge a marathoner based on their first 100 meters? Of course not. SIPs like marathons. It's all about endurance. While short-term volatility might cause dips, the real magic happens when you stick with them for 5, 7, or even 10 years. So now as we have covered these factors, now let us understand about negative SIP returns by answering your top questions. Number 1, what should you do if your SIP shows negative returns? When the numbers go red, what's your first instinct? Pass your SIP? Pull out your investment? Let me stop you right there. Warren Buffett once said, the stock market is designed to transfer money from the active to the patient. Doesn't that resonate? Reacting impulsively to short-term losses often means missing out on long-term gains. So, isn't it wiser to focus on your financial goals instead of the daily market noise? Number 2. Should you pass SIPs when returns are negative? Nope, that's the last thing you should do. Why? SIPs work on rupee cost averaging. What does that mean for you? When the markets are down, you're buying more units at lower prices. It's like getting your favorite product on sale. Doesn't that sound like a smart move? Number 3. Can you transfer your SIP to another fund? Sure, you can transfer, but should you? Before making a switch, ask yourself this. Why is my current fund underperforming? Is it because of temporary market condition, or is the fund genuinely not aligned with your financial goal? Only make a move if the latter is true. Number 4. How can you reduce losses during market downturn? Diversification is your best friend. By spreading your investment across different asset classes, you reduce the impact of any one market downturn. Think of it as not putting all your eggs in one basket. Isn't it better to be prepared for turbulence than caught off guard? Number 5. How long does it take to achieve positive returns? Patience is key. Equity funds, for instance, usually need 5 to 7 years to show their true potential. So, shouldn't you let time work its magic instead of panicking over short-term losses? Alright, now that you understand why negative returns happen, let's talk strategy. What should you do when your SIPs are in the red? Here are 5 actionable steps. Number 1, stay informed and educated. How much do you really know about the market? Staying updated on market trends and economic shift can make a world of difference. Isn't it empowering to understand the forces driving your investments? Number 2, focus on long-term goals. When the markets are rough, are you fixated on short-term losses or are you keeping your eyes on the price, your long-term goals? The latter is where success lies. Number 3, consult a financial advisor. Feeling lost? Why not turn to a professional? A financial advisor can help you align your investments with your risk tolerance and financial goals. Isn't it comforting to have an expert in your corner? Number 4, review and adjust your portfolio. When was the last time you reviewed your investment portfolio? Regular check ins can help you identify underperforming assets and optimize your returns. Isn't it time you gave your investments a little TLC? Number 5, stay disciplined during volatile periods. Are your emotions guiding your decisions? Market volatility can be nerve wracking, but staying disciplined and sticking to your plan will help you ride out the storm. Isn't discipline the secret sauce to investment success? Now, what is the final takeaway from this video? Negative returns in SIPs are like speed bumps on the road to financial success. They slow you down temporarily, but they don't stop you. So, the next time you see your SIPs in the red, ask yourself this: am I focused on short term noise or am I committed to long term goals? Remember, mutual funds are designed to deliver stable and rewarding returns over time. The secret? Patience, discipline, and strategy. Did this video help you feel more confident about your SIP investments? Share your thoughts in the comments below. Don't forget to like, subscribe, and hit the bell icon to stay updated on all things mutual funds. Need personalized advice? Click the link in the description to book a free consultation with us. Let's secure your financial future together.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.